Trump's victory and what we saw, global markets reaction. We're joined by Ron Biscardi, CEO of Context Capital Partners. Ron, thanks for joining us.
Thank you for having me, Michelle.
So Ron, markets in the U.S. green across the board today, certainly not what we were expecting as a reaction to a Trump victory. Not that that was what everybody expected either. What's your take?
It was shocking, to say the least. My take on it is clearly the market was expecting, in the event of a Trump win, it was priced in that there'd be a 4 to 5% drop. We saw that overnight in the futures. And I think what really turned it was his acceptance speech. I think what we've seen from candidate Trump over the course of the campaign has been a very unpredictable personality, and markets don't like unpredictability. So the candidate that we saw last night, or the future president who we saw last night in that acceptance speech, was a very different person, in my opinion. I thought he was very level-headed, very calm. He looked presidential. And I think it eliminated a lot of the sort of wild card factor that has sort of plagued him. So I think that, combined with Hillary's speech of acceptance and openness to him being the president, was a good combination to sort of take markets in the rally that we saw. And in addition, I don't think anyone expected that it would be a Trump presidency with a Republican-controlled House and Senate. So the combination of all those things, I think, really led to the rally.
Well, he certainly did come across as more presidential, but was that enough to prevent this sell-off that everybody had anticipated? We also saw European markets closing up. Why did they respond favorably?
I don't think there was any magic there. I think Europe largely got dragged up by the U.S. markets. I think once U.S. futures turned and then the markets opened and took off, I think European markets largely just sort of were responding to what was happening in the U.S. But I don't think it was much more complicated than that.
Asian markets, though, they did close down. Not as dramatically down, though, as you would expect, right?
No, not as much, but still didn't perform as well as the U.S. market. My sense there is, while a more presidential Trump is clearly a step in the right direction, he has said many things that are clearly very concerning about global trade and trade with Asia in particular. Talk of tariffs and things that I think most economists clearly believe would be bad for the global economy. So he still needs to reconcile a lot of that, and hopefully he will land on the right side of trade, but that's yet to be seen.
Well, that's a whole bigger conversation where he stands on trade policy, but let's talk about the sectors that have performed well based on a Trump presidency. Surely a lot more in play than just the fact that he came across more presidential in his acceptance speech. We had in the Dow, the top two gainers, Caterpillar and Goldman Sachs. Caterpillar up 7%. Is that a bet on big infrastructure spending?
I think it clearly is. He has been very committed to rebuilding America. He sees his mandate, I believe, as one that will allow him to take on probably substantial debt and deploy that capital into rebuilding roads, bridges, train stations, airports. I think you're going to see a massive building boom throughout the country, and I think there's a lot of support for it, really, on both sides of the aisle. So that's one, especially.
And it'll be easier to pass.
It'll be
as well.
Much easier, exactly.
Financial sector also rallying. He has said that he is going to perhaps repeal Dodd-Frank, certainly lessen regulation. Is that what's driving the rally there?
I think. Primarily, I think the financial sector will benefit to some degree from the boom in infrastructure, but primarily, I think Dodd-Frank has been a real drag on the financial sector. I think this is clearly a big win for the banks. The regulation is so overwhelming at this point. I think it clearly is necessary for a fair market, but I think it's really, the pendulum swung too far in that direction, and I'd be very surprised if he doesn't pull it back substantially.
The sentiment has been that Trump, being a businessman, is pro-business. Do you agree?
I do agree. I think he's pro-business. I think he's especially pro-small business. And I think the lessening the regulatory burden is clearly a win for small business because, of course, large companies are always much better equipped to deal with regulation. Right. So I think he clearly gain the support of lots of small businesses, especially in the center of the country, and I think they're counting on that burden to be lowered.
Let's touch on the anti-Hillary rally, and that we saw in healthcare and in pharma. Pfizer up 7%. Is that all in response to Hillary's former pledges that she was going to lower drug prices?
I believe so. I think she clearly was headed down the path of implementing some form of price controls, excuse me, within pharmaceuticals, and there's no evidence that he would sort of pick up that banner. So clearly, I think that rally had to do more with her losing. And in healthcare, broadly, it's very clear that he wants to do something significant to Obamacare, whether it's repeal it completely or redo it in some significant form. I think that's very, very likely to happen.
Ron, what does this all mean for the dollar, and what does this mean for the dollar with regards to the Fed and potentially raising interest rates in December? Does that mean that that is probably off the table now?
I don't believe so. I think it's likely that the Fed will stick to the plan and raise rates in December. And I think today's market has given them an even better opportunity to execute on that, because you saw interest rates rise as part of today's market activity. So, you know, they've been painted into a corner for a long time. They painted themselves into that corner, in my opinion. But now they've got some room to maneuver. I think the only things that would prevent or sort of dissuade them from a rate hike would be either a significant economic downturn, some significant economic event that doesn't show up, at least not yet in the data, or a significant market correction. So I think if either of those things happen, it's certainly possible that they hold off. But short of those things, I'd be surprised if they don't hike.
The Mexico peso taking a hard hit.
Yes. Yes.
That's all in response to the anti-trade sentiment. Ron, we're wrapping up here. I'm going to ask you to look into your magic crystal ball here. Tell us, what do you expect over the next week from these markets?
You know, I think Trump has begun to build a better relationship. He is now the president-elect, and I think he has a responsibility to act presidential and to build relationships with the markets. And I expect he will continue to do that. You saw Carl Icahn came out and said he left the party last night, invested $1 billion in stocks. I think he will continue to build those relationships, and I think markets will begin to calm, and you'll see less volatility in relation to him.
All right, we'll see if that's what we can expect. It's all been an unexpected expectation. Thank you so much, Ron Biscardi, CEO of Context Capital Partners.